What's up, Wealth Nation? Are you financially healthy? Well, if you have to stop and think about it for a moment, you should watch the rest of this video, because by the end of this video, you are going to learn our 5-step bulletproof system to ensure your financial health. My name is Carmen.
And I'm Darius. And as licensed life insurance agents, a lot of times we get questions on, is my health good enough to get life insurance? Well, here's the thing. If your finances are in order, then you stand a better chance of being able to send a cover letter and explain to the insurance company your health. So the whole point of this video is jumping into those 5 points of how do we get our finances in order. But before we jump into it, make sure you subscribe to our channel and hit the notification bell to be notified when we post new videos.
I'm so glad that you led with that, Darius, because just to reiterate exactly what he was saying, right? A lot of y'all come to us and go, am I healthy enough? And we want to know, do you have the income? You see, the conversation is different. And the reason why we ask that question is because we overlook our financial health and we focus on the physical piece of things, because just because you're healthy or maybe not doesn't necessarily mean that you could also afford a life insurance policy. So that's the realness of the conversation that we want to talk about today, because point number one is, do you have $2,000 saved in the bank today that you could call on should an emergency arise? And the reason why this is important is because 50% of Americans cannot afford a $500 emergency should something come up. So that's, again, going into this whole conversation of, can I get life insurance? Well, let's make sure that you can afford it and that it aligns with your financial goals so that everything can come together. So with all the research we've done, we have come to find out that the average emergency these days is $1,500 due to inflation, right? Things have changed and life has become a lot more expensive. And so for us, we say have a minimum of $2,000 in your emergency fund, what we call an ABC account, so you can pay for A, B, or C should something come up. We want a positive spin on it, right? So that we can make sure that, again, that money is available should we need it.
Right. Now, this is just a starting point. If you want to have more than $2,000 in your ABC fund, then by all means. Carmen and I, we like to have one whole check in our ABC fund so that we can make sure that we're covered regardless of whether A, B, or C comes up.
Mm-hmm. And with that, I think there are limits. Like, you should really not have any more than $5,000 just sitting in your savings account, because any more than that, I would consider excessive, and you could use that money to be making more money, right? We are just thinking of this as an ABC account, right? This isn't just a pool to stash money in.
Right. Now, the second thing that we want to make sure we have is 6 months of our income saved. The reason why we want to have our income saved or our necessities saved, so that if something was to present itself that is not in line with our lifestyle, like let's say we lose a job, that isn't in line with the lifestyle. If we were to lose our job, we want to make sure that we're able to support ourselves until we find an additional stream of income.
Mm-hmm. And when we say have 6 months worth of our needs available, right? We're not talking about we're going shopping during this time or excessive consuming. We just want to make sure that you're focused on being able to maintain your household, maintain your electricity bill, maintain going to and from the grocery store. Those are the necessities that we say that you should have saved, and you need 6 months worth of that, either saved in the bank or saved in a high interest environment. That's typically what we prefer. What Darius and I do is we hold 6 months worth of our income inside a life insurance policy, because we know that we're always going to be accruing the compound interest. We don't like to have really more than $5,000 in any bank account at any time, because we know that we could be making more money inside a different environment.
Right. Now, that's our personal bank account. Mm-hmm. Now, there's two things that I want to add to this, is the fact that, or the thing that I want to add to this is to make sure they're kept in two different places. Because Carmen and I, we've had instances where we kept our 6 months of savings in our account, and what happened is our wants came into the category of being the things that we actually had, and we started to see our 6 months of savings start to dwindle, when it needs to be a little available. Because it was available. So it should be a little more difficult to get access to your 6 months of savings than it is to take care of an emergency immediately.
Mm-hmm. Now, let's take a break, a pause from the points real quick, because with emphasizing point 1 and 2, having an ABC account, and the second account, the 6 months worth of savings, we consider your stash account. Having those two in place are going to significantly increase your financial health scale, right? Because when you wake up every day, you know that your defense is in place. So if anything comes up, you know that the funds are available and you don't have to go into debt or ask a friend to borrow funds, because again, we have to consider the amount of Americans that just aren't prepared for emergencies. And it wasn't until Darius and I had this intention with saving money that allowed us to breathe a sigh of relief and know that we don't have to get up and worry about things or always be on edge, because we just know that the finances were in order to take care of emergencies. And the best part about this, family, is that when you are no longer focused on dodging emergencies stop happening. Because what you focus on expands. And if you're always thinking about something's going to happen, what's going to happen, how am I going to pay for this, then you're just going to continue to get fed that same energy. And once we recognize that, like, we had the money available, we didn't have any more emergencies. There wasn't anything else that we had to worry about. It just became a completely different lifestyle that we were just popped right into, because our mindset changed around money. And once you have the ABC account and the stash account set up, then at that point, we would totally recommend that you start exploring your options for being more aggressive with your life insurance options, right? You should always have some sort of life insurance, but when you decide, okay, I want to start putting more and more of my income to life insurance, then the idea behind that is you always want to have at least 10 times your income in life insurance. And that's the third point. So what I want to make sure that we're all on the same page is that you have a strong foundation in place, or like we talk about defense with point number 1 and point number 2, before you even start thinking about getting the life insurance policies that Darius and I talk about. Because the biggest thing understanding is that you need to make sure that you can maintain your policy should you want to do infinite banking and get loans from your policies to finance your lifestyle and all the amazing things that we talk about on this channel. But what we find out more often than not is if your finances aren't up to snuff, then that's going to significantly affect what you can do with your whole life insurance policy, and you could wreck your system. And we've been there, which is why we're sharing, again, this 5-step bulletproof system that we feel is really necessary because we've lived it. And these are the things that we have learned maybe backwards through this process, but we've put it all together in one easy, digestible form so that we can make sure that you all are covered.
Right. Now, we have a strong emphasis on this channel on cash value life insurance. And the reason being is because when we have 10 times our net worth, we're able to teach our beneficiary how to invest those funds at a 10% interest rate and replace that income or the loss of that loved one or you with cash flow. Mm-hmm. The only way we're able to do that is by using the process and being able to teach the process of investing and making money so that we can continue to leave a legacy for our family even when we're not there.
Mm-hmm, absolutely. And that goes to point number 4 is ensuring, you get where we're going here, ensuring that every member of your household is covered. So we're saying this because a lot of times we find partners maybe will only insure the partner who is working, and that the stay-at-home partner maybe doesn't have life insurance. But the idea is every person who is contributing to your household should have life insurance, because again, there are going to be financial needs in place should anything happen to a family member, in addition to insuring your children. Now, I know this is kind of counterintuitive to our culture and what we think about, but insuring your children, especially when they're young, is the cheapest life insurance will ever be for them. And this is a really amazing hack for you to be able to ensure your grandchildren have some financial stability should something happen to your children at a certain age. And to put some context to this, when our daughter was 1 year old, we got life insurance on her, and to the tune of $3 million when she turns 60 years old, that will be the available death benefit. So that gives Darius and I a lot of peace of mind knowing that just with this one policy we bought her, which won't be her last, we've already set up our grandchildren to have $3 million should something happen to our daughter. So these are, again, those little hacks that we can do for pennies on the dollar to just ensure the lineage and think about life insurance from a different perspective as opposed to just thinking about it from a morbid standpoint.
Right. And when we think about buying life insurance on our children, we're setting the next generation up for success, because there's a small percentage of people like the Rothschilds that actually buy life insurance policies on children because they already have their life insurance policies because their grandparents bought policies on them. Mm-hmm. So what they're doing is buying life insurance on their children because that is the cheapest, like Carmen said, it will ever be. And by the time they're adults, they're able to understand how to use this asset to make more money.
Now, the fifth point, and one of the most important points that we need to harp on, is our ability to understand how much money we need should we retire. And we find that this has become a really important topic because we have so many individuals that come to us at the year of 50 and say, I think I screwed the pooch because I'm not ready, right? And we had all this time to determine what that income could be and maybe plan for a little bit better, but we just didn't have the tools or the knowledge to know how to do so. So with that being said, what we want to do right now is make sure that you understand how much income you need to sustain your household should you retire tomorrow. Right? Like just do the numbers and figure out if I make $10,000 a month, is $10,000 going to fund my specific household 20, 30 years from now? What does that look like with inflation? And there's all sorts of inflation calculators and things that you can use online to determine what that could potentially look like and how much money you need in order to make sure that your lifestyle can be sustained for, 30, 40 years if you decide to retire. And it's just simple math equations that you can start thinking about and being more intentional with saving your money, with investing your money, so that you can ensure, again, that your finances or your financial health is taken care of, not only today, but for years to come.
Right. Now, all these things that we talked about are related to having a peace of mind. This is a peace of mind so that we can focus on offense. Everything that we just talked about is defense, so that in the event something happens, it's something that you don't have to worry about. You can focus on making money. You can focus on your investments. You can focus on the strategy that you're going to use to make more money without having to worry about these things. This is all defensive things.
Absolutely. And this is the amazing opportunity that you can to transform your financial health. Because a lot of times people say in sports, offense doesn't necessarily win a game. It could be the defense that helps you win the game, right? And this is what's going to help you win your financial game by having those defense mechanisms in place to ensure that every day you wake up, I have a plan. If emergencies come up, I'm not stressing. My babies are covered. I'm covered. I can die happy knowing that everybody got money and money is in the bank, right? Because that's the goal.
As an example, let's say you are making this investment that doesn't pay out for another 24 months. Be it real estate, a big real estate deal you're doing. Now, what we would need to make sure is that we don't tap into our investment because we can't sustain ourselves. Because what that does is not only does it take away funds from our investment, it takes away from the future earning potential of our investment when we tap into it. So let's not be in a position where we have to tap into our retirement, because we need that more in the future than we do right now. It may not feel like it, but that $100 or $1,000 is the equivalent of $10,000 that you lost the opportunity to earn.
Absolutely. Now, Wealth Nation, let us know in the comments below, how many of these points do you have covered? Do you have an ABC account? Do you have a stash account? Do you have 10 times your income insured in death benefit for all members of your family? Well, your children can't have 10 times, but the point is, are they insured? And then the last point is, do you know how much income you need on a monthly basis when you retire, and are you making a plan for it? So let us know in the comments below.
Right. And if you want more information on how to use cash value life insurance, check out our next video.
And don't forget to own your own lifestyle,
or someone else will.